All right, so a member asked me my opinion on three different D1s that they chose. I'm not going to tell you whether or not this was like a good long or a bad long necessarily. I'm just going to look at the validity of the D1 essentially, because that's really where everything boils down to. Their timing intraday or whatever, who knows? But yeah, people will ask me for opinions on some of the trades that they took, and I try to give them my best answer. Remember, this is discretionary day trading, so my opinion might not necessarily be right, but this is kind of what I would have done, and I'm doing okay. So the three trades were LYV long, Oracle short, and UPS long. So they're wondering if they were good trades or not, or what my opinion was on them. So let's take a look at LYV long first. So we've got this nice uptrend here across all of this sort of horizontal business right through here, and it looks like it's filling the gap that this big giant candle made. Which is kind of cool. Now, if we look at this compared to SPY, the entry was on this day right through here, and then SPY was also on that day as well. So even though we had LYV kind of holding this high through here, but then SPY had these dips, it's not necessarily that relatively strong, especially for the nature of this. So if you don't have a ton of relative strength, what you want to have is a ton of relative volume. Now, this candle is giant because it's triple witching. It's like one of the biggest triple witchings of all time. So don't worry about that too much. But we have a really nice candle pop through here, which was the post FOMC. And the cool thing about this was that we had this little pullback, but then a launch. And then that coincided with the second day on SPY, which was just a little bit of a gap up but a hold. But then LYV really took off. So there's some ambiguity about this D1. But I'm not too concerned about that. I don't like the lack of volume on the rest of these days. That's one of the big issues. But the biggest issue that I saw on this was, even though it looked like it cleared an algo line, or it was about to, it hadn't broken the algo line yet. If you look at that, it's really close to it. So your upside is pretty limited on this thing, right? If you take a look at this high volume D1 candle right through there, it's pretty close to that. And then look at all this high volume business in here. Whenever I see this type of stuff, if you zoom in on it, and you look really close here, like there's a ton of high volume candles here that this could come off of. So it could be off of there, or it could be off of there. And the likelihood, or even of this stuff down through here, the likelihood of one of those candles interacting with this price action down here, or these candles, or one of those candles ignoring this wick, or using that wick, and having some sort of support still, or sorry, resistance still existing up here is quite high. You can see all the potential candles that an algo line could start from up there, and they're all down sloping. They're all nasty. Like if you get rejected, you're not coming back from that type of candle. That's what would not make this trade a valid trade for me. Even though the D1 looks okay, that's why, because the upside is limited. You don't know how far your upside is. And then also the potential for you to be running into resistance is really high. So that's why I didn't like LYV. So let's move on to Oracle, ORCL. This is an interesting one because people would say, well, why would you shorten an uptrend, et cetera, et cetera, et cetera. Well, we had been in such a long, crazy uptrend. And then this was one of the first red candle days that we got in a long time. And it actually looked fairly convincing that we may be breaking below. So maybe this person had a whole bunch of longs in their portfolio. And then this was the first day where they're like, shit, I don't have any short exposure. Maybe I should put something good on that's short. So they took a look at Oracle, and it was a nice break through the 100 SMA. And there's a little bit of volume on that too. And of course, it's got relative weakness, which is interesting because this went kind of flat while SPY went up, and then we dropped down through here. So let's not even talk about whether or not they should have taken a short on that day, because it depends on their portfolio, depends on what they were aiming for, depends on a whole bunch of different things. You could argue to say that taking a short was a bad idea, but that's kind of ambiguous. I wouldn't say that that's an area that would make or break a trader. I would say the chart selection is a bit suspicious, primarily because earnings are in 1, 2, 3 days after your trade. So your trade has to work right away. And then secondarily, it's a shame they didn't take it on this day, isn't it? Secondarily, this isn't really that weak of a chart overall. Like the whole thing is in a big uptrend. So if you're looking at buying and selling even on a long-term, like a D1 basis, it'll oscillate. So the relative strength will go up, then it'll go down, then it'll go up, then it'll go down. But if the chart just keeps kind of coming up and down, you don't want to short on one of these dips because you could very easily just have it be pulling back to an anchored VWAP, ready for buying again, something like that, right? it could be very simple. So maybe this 200 SMA resolve was what kind of took them through. Or maybe, it broke through and we thought, okay, well, it was going to break that. That's pretty good. But there's better options out there. I would say your better option if you wanted to take a short on that day was HSY. You can see the bearish nature of this chart in that the relative weakness is probably relative weakness in your favor. Or maybe even Starbucks. SBUX. Oh, geez. Disregard all those lines. Starbucks, like somewhere around through here, I think was the day. Was it the same day? No, that was the day before. So like that, Starbucks would have been maybe a better option in terms of D1 selection, but the timing was off on that. So that's why I wouldn't have liked Oracle, because it was 3 days from earnings, and also the chart as a overall was going up. It was in the top corner. There are still charts down through here. Take a look at this one, CART. Look at CART, CRT. I think this thing has weekly options too. So, any day now, this thing might break below compression and be a good short. So the last one was UPS. This one's the trickiest one. So if we take a look at UPS, their entry was, let me just take a look right through here, 12.7. Where's 12.7? Oh wait, I already have it up there. Okay, so on the 7th, they took it through there. So here's some issues with UPS, or some issues in general with taking longs as SPY is just sort of melting up. It's really hard to find what's actually strong without it being too overextended. That's tricky. So what you're really looking for on these types of days is you're looking for stocks that have pulled back, that are showing significant relative strength. Something that just found support on the ADMA and then bounced off that right away. You're not looking for charts that are stronger than SPY and really far away from their ADMA, because they're ready for a pullback to whatever AVWAP might be around through there. Like essentially the person filling the order on the big institutional money, they're getting too far away from their optimal price. So you're really looking for something that has bounced and then showing wicked strength with good volume. And that's really all you can do. So if we're looking at UPS, it doesn't have relative strength. Oh wait, it does have relative strength, but it doesn't have relative strength in its sector. So it's not the strongest ticker in this sector. It's got some relative strength. The volume there's nothing special about the volume, but here's the big kicker. If you entered this trade, let's say even on the close, like let's say your entry was there, but it's probably more like up there, you have 1.5% of room until your profit target. And remember, you're taking longs here in a very bullish environment. We're hoping to ride these things for as long as possible. So your upside on UPS is very limited. You don't really have that much upside. Now, it is pretty cool in a sense that we look at the algo breaks. It doesn't have any real big algos in the way for a while. We have this one right through here that it just broke. If you look at it, it just broke that. Then it actually confirmed off it. So if I line up that, you can see how the price action went through that and then like bounced and then went back up. So this is a really cool algo break confirmation, which is neat, but it doesn't have enough upside. And I don't think it has enough significant relative strength or volume to take. Now, this person, they took a very small loss on it because it was right into the FOMC, right? So it was right there or something like that. And then they took a loss because they're going right into the FOMC. I didn't play the FOMC well either. I took really tiny profits the morning of. As a last disclaimer on these like charts or whatever, I think the best strategy for the FOMC was we were expecting them to be excited about the FOMC, the 2 p.m. number, but then we were saying there was a good chance that Jay Powell would splash some cold water in their face, say some hawkish stuff, and reverse that in his press conference at 2:30. So you could have technically waited until 2:30 and even waited for him to say something hawkish to see the algos respond before you took profits. You could have rode the hype FOMO up, and then you could have taken profits on the first sign of bearish action. And in fact, there wasn't any this time, which there usually is. So you actually could have just ridden it all the way up, which is very, very interesting. But that's the situation on that. So anyways, those are 3 D1 charts. I tried to rip through them as quickly as possible. It's another long video. But those are the reasons why I would vet out those charts, because of those variety of reasons. The type of D1s you're looking for is extremely important in this type of trading. The D1 is everything. So hopefully that helps give you some insight in terms of the discretionary approach.